Welcome back. This is Open Exchange, and we are coming to you live from the CNBC-TV18 Motilal Oswal newsroom. Well, plenty to talk about, but before we get to the pre-open rates, let's get in Manoj Muralidharan. He's joining in to give us some derivative strategies. Morning, Manoj. How do you see things shape up? Most of the voices that we got earlier today are suggesting an extension on the upside. Are you in that camp?
Good morning, Nigel. Nigel, when we saw the rollovers happening from Feb to March, it was primarily short rollovers. We all know that almost a good 83-84%, even on the FI desk, they were shorting it. But then eventually, if you see the open interest in the Nifty, it went up to almost 1.25 odd crores. And then eventually we saw the short covering coming in. And yesterday, for the first time, though less, but yes, 4.5% of fresh long positions have been formed. So at least one cycle is over, is what we believe, at least from the short side. But that does not necessarily give you a momentum at every day. But then we believe 17,700 to 730 on the future is a good level. We can go long on the spot. I'm sorry, that would be a good level to go long, because we are expecting the resistance to be closer to 17,850. Because I second Anuj on that, he was looking at the 17,800 strike call option, and we believe that might still hold as a resistance for today's trade, and the expiry on spot basis can be closer to 17,730 to 750. So buying closer to 700 to 730 for a target of 820 should be the trade for intraday specifically. But having said this, for this series of March, there is a possibility that the Nifty might extend all the way to 18,100. That happens to be the previous resistance. But the support for this entire long positional trade would be somewhere close to 17,550.
What about individual stocks?
Stock specific, we like NTPC. That's a stock for the month as well. We believe the stock might rally all the way to 188, but buying it closer to 175 to 76 seems prudent at this point of time, even with the cash-based buying or maybe stock futures. The second stock that we like is Ramco Cement. Has seen fresh long build-up in yesterday's trade, and a follow-up buying might come in today as well. The target should be somewhere close to a 760 on that, and we believe 738 to 740 is a good level to buy that. The stop loss should be 745 on the stock.
Okay, all right. Thanks a lot for that, Manoj. Have a good day. By the way, the pre-opening rates have now settled a tad bit higher. The Nifty is up almost about 8 odd points. Adani Enterprises up about 2%. Bharti Airtel, there was a very aggressive target price of 1,000 rupee plus from CLSA on Bharti Airtel. So that's the big mover, up 1.5% right now. And Tata Steel, Adani Ports, Apollo Hospitals are a couple of other stocks are looking good. But let's get straight to our Momentumizer segment. Mangalam is here to tell us what's on his list. Mangalam, over to you.
Good morning. So the stock that I'm watching out for today is DB Realty. Not something that we speak about very often, but it's rallied about 6% this week and over 20% in the month of March itself. This after having seen a big correction. It's still half from what it was at its 52-week high. And in this up move, it's also crossed its 20-day moving average. The stock is a little below its 50-day moving average. So that's something that I'll be watching out for from a technical standpoint. Were it to cross that 50-day moving average, we'll keep an eye out on both the 200 and the 100-day moving averages of the stock. The reason why I'm watching out for this move is that it's backed by good volumes. Yesterday, the overall traded volumes of the stock were close to 8 crore rupees, and this compares with the 2023 average of just a little over 3 odd crore rupees. And at higher levels, we are also seeing more stocks backed by delivery. So 5.56 lakh shares were marked for delivery yesterday, and that's a little over 2 times what we've seen in this calendar year so far. What is it that we'll be watching out for in particular today for DB Realty? Well, Maharashtra announces its state budget today. So, any announcement with regards to real estate is key to watch, because this player is primarily focused towards the Bombay real estate market.
Okay, got that, Mangalam. We'll definitely watch out for DB Realty. That's the Momentumizer. By the way, just to go back to Bharti, now CLSA, why is CLSA so aggressive, and why do they have this 1,000 rupee plus sort of a target on the stock? CLSA is basically sort of pulling together everything that's happened in the last couple of months. The fact that they have taken these entry-level tariff hikes in a lot of key circles. They're saying that cumulative, these hikes at the entry level are over 50%. And Mr. Sunil Bharti Mittal is obviously talking about more hikes getting into 2023. The question is whether they can expand the hikes from the bottom of the pyramid to the middle rung. And then obviously there's 5G rollout, and hopefully people keep trading upwards in terms of more data usage. That's what's getting CLSA really excited, and that's a stock 790. CLSA is exact. Actually, let me pick that out. It's a 1,000 plus target that we are talking about from CLSA. 1,015,
I think, yeah,
is what they're calling out for. And in the pre-open, that is a stock that's reacting to that particular brokerage's commentary. However, for the time being, we're going to put the spotlight on the insurance sector. We got, of course, the monthly numbers out. So let's just pass through them and look at the good, the bad, and the ugly. Nischint Chaute, Director, Kotak Institutional Equities, is with us for exactly that. Nischint, thanks very much for joining in. So you tell us at the headline number, I mean, if I just look at the big headline, year-on-year life insurance premium, the total numbers, I mean, total collections for the sector as a whole are down. But beneath the surface, help us understand, I mean, who's doing better? What's the good? What's the not so good?
Sure, thanks. If I look at the performance for the month of Feb, it was actually better than the previous months. Private sector overall AP was up around 17% as compared to 15% over the last 2 months. If I look at the private sector, excluding the top 4 players, the AP was up around 28%. So if you look at it, Feb performance was actually better than the last few months, last 2 to 3 months. And it's not really a surprise, given the fact that, we are in the fact last 2 months of the sunset period for the higher ticket, non-par policies. So as we know, the large ticket 5 lakh plus non-par policies, the income from these policies will be taxed from next year. So you would expect some of the larger insurance companies to push these products over the last 2 months, which we call as a sunset period, and which is the reason I think some of the larger players have done well. Amongst the larger players, HDFC has kind of reported very strong growth at around 27% on the individual AP side. ICICI has reported a headline growth of 7%, but I think if we try to strip the ICICI Bank versus the rest of the business has done pretty well. SBI has been flattish, but I think what we need to keep in mind is that SBI tends to be sort of fairly volatile. And Max has actually been a little weak at around 6%. My sense is that this is more to do with the fact that Axis Bank would have been a little slow in the last month. So it's actually a mixed bag, but directionally it's up.
So, Nischint, good morning. I have to ask you about HDFC Life because, I mean, the numbers this time don't look so bad. It's what, about a 10% growth on the premium side. But if you map the stock, right, it's been so frustrating for investors. I think the stock has done nothing in the last 3 years. 3 years back, it was 500 and HDFC Life is 500 even today. Your thoughts here and what do you see as the way forward?
If you look at HDFC Life's performance over the last many years, they have been consistently gaining market share. Over the last 12 months or so, their market share has almost been stable. This is more to do with the fact that, within the HDFC Bank franchise, there has been some counter share adjustment where the other 2 players have taken market share from HDFC Life. I think incrementally, the trend over the last 2-3 months is encouraging. It kind of seems to suggest that HDFC Life is making a comeback. So it's early days, but looks like they are sort of again back in the market share gain mode. Having said that, I think the biggest event that we are watching out for HDFC or for the entire sector is, how do these companies react from next year when a part of the business, which is essentially the HNI non-par business, is something which will lose its appeal because of the fact that these policies will come under the tax net.
No,
so
Nischint, my question was, despite them gaining market share and of course the business improving, why has the stock done nothing for investors? And do you expect that to change?
Yeah, so last 1 year, they have actually not been able to gain market share, right? They have been started to do well only in the last 2 or 3 months. And, then you suddenly had this whole tax thing coming in and being a spoiler for the stock. But over the last 1 year, they have actually not been able to gain market share because of the fact that there was a realignment in the, in the counter share at HDFC Bank. And that seems to be the single most factor out here.
Okay, Nischint, before we let you go, just a quick word on the health insurers as well. I mean, on the general side, which are the stocks that you like the most over here?
Yeah, so on the general side, we're still expecting the monthly numbers, but I think from a stock point of view, Star Health is the one that that we like. This is again a company which has a solid franchise on the retail health side, almost 30% plus kind of a market share out here. And this is a franchise which is really not uncomparable with anybody else. And and health, as we know, is a sector which is growing faster than the rest of the non-life space. So this is our favorite pick, in the sector per se. Having said that, I think in this sector, what we are really watching out for is the high health inflation in India and the impact that it has on these companies. Star Health and all the other players have taken large tariff hikes. So we'll have to kind of wait and see as to how these tariff hikes feed into demand and overall profitability.
All right, Nishan, thanks so much for stopping by and giving us a view on the insurance space. Wishing you a good day ahead. Well, it's 9:10, so a good time to get in our technical expert. Sudarshan's back with us and Mitesh as well. Sudarshan, you go first. What's the 9:10 call?
Well, consider buying Hind Petro with a stop under 215, 215.
Okay. Mitesh, what about you?
Yeah. I'll go with a buy on Eicher Motors. Keep a stop at about 31.75 or just below it, and a target of 32.60 can be.
Okay, all right. Well, we're just getting into market opening in about a couple of minutes from now. Mangalam is joining in. He has Asian Paints on his radar. Mangalam, over to you.
Well, I'm watching out for Asian Paints because there's a very interesting note which has come in on Asian Paints from Macquarie, and this is after some clarification coming in on the paints foray by Grasim itself. What is it that Grasim has clarified? Now, we already know that they had earmarked 10,000 crores as capex for paint, but Grasim in its recent meet has clarified that this 10,000 crore includes paint capex for plant, working capital, branding, as well as tinting machine costs. And this is where Macquarie says that the street had earlier assumed that this entire 10,000 crore would go for plant additions itself. So they've made some calculations of where Grasim will use these 10,000 crores for their paint foray. 300 to 400 crore will come in on working capital, 300 to 400 crore on the tinting machines to reach nearly 20,000 distributors. Branding and ad spends could be anywhere between 250 to 800 crores, which is similar to the range that we have between Berger Paints as well as Asian Paints. And plant commissioning could be no more than regional in the initial phase, as against the street's fear of national launches itself. So as a result of which, Macquarie believes that the impact on Asian Paints and other leaders could be limited, more so on Asian Paints because of its leadership. So they maintain their outperform rating on the stock with a target price of 3,600. So Grasim's foray not as scary for Asian Paints as earlier feared.
Got that. All right, Mangalam, thanks a lot for that. So that's on Asian Paints. So let's focus on the metal index. Remember, the dollar index has moved to around 105.6, which is not very positive. But otherwise, a couple of brokerage notes are positive. So Jefferies, they say that the Indian metal stocks have underperformed in this year so far, and it's a buying opportunity. Their top pick is Tata Steel, followed by Hindalco, and the target prices come up for you on the screen. On the Chinese data, they're saying the manufacturing PMI data as well as the property prices, they're starting to stabilize, and they like those data points. Chinese steel prices, remember, they took a sharp knock in the last year, but this year they're up by close to 14%. And they're saying accounting for seasonality, well, the inventory levels are the lowest we've seen in the last 4 years. On Indian pricing, they said last year, yes, we saw prices did decline, but this year prices are up by close to 8% at around 60,000 rupees per ton, which is their estimate for the next couple of years. And we're trading at a bit of a discount here in India in comparison to imported steel. So that's giving some headroom to increase prices. Next up, Asian steel spreads. Well, they have improved a little bit, but they're still lower than the long-term averages. So there is scope to improve out here. And finally, on aluminium, yes, the prices haven't moved much, but thermal coal costs have moved down. So that's positive on the spread front.
Okay, well, let's go across to our colleague Abhishek. He's been tracking this whole Chola Mandalam buying apt as the possibility of that. Abhishek, what's the latest there?
Well, CLSA has written a note on Chola. They have a buy recommendation target price of 875. They have written what is the possibility scenario of Chola buying after. So what will happen over there? It's ROA accretive given the fact that the merged entity could have a 20-30 basis point gain on the ROA. Loan mix would not change much. However, such a merger would catapult Chola in terms of 2-3 year forward with its foreign affordable housing segment. ROA would expand without any merger synergies, and due to lower balance sheet leverage, the ROE can decline by 70 basis points. The transaction would be marginally EPS dilutive for Chola. However, reduction in cost of funds and operational synergies are the key benefits out of this merger, and they would be neutral towards a merger. We also have clarification from Aptus who say that the company is not part of any negotiation or events as mentioned in the news report, but they have not denied the fact that succession is a key hindrance at Aptus. Back to you.
All right, Abhishek, thanks very much for that. Well, we have just 30 seconds to go before things open up. And Bharti Airtel really is a stock that you need to focus on. We're talking about a near 4% up move on the pop. The life high for the stock has been 860. CLSA is calling for 1,015. And Sonia, that's definitely one stock I think that people will really watch out for as the journey starts out today.
Okay, 10 seconds left for the market opening. Remember, the Nifty has already gained for 3 straight days. So is this the 4th day of an up move? Time will tell, but the Nifty has covered quite a bit of ground. In the last 5 days, it's up almost 2.5%. And that's the first tick on the opening bell. It's looking pretty decent. It's actually a shade of green, which is a good thing. The Nifty flitting between red and green. What's looking good is the mid-cap index, which is up almost about 75 points right now. So the start is well in the green for the broader markets, that is. The advance decline ratio also is well in favor of advances. Over 1,350 stocks on the advancing side. Now, what's gaining? Hindalco is up almost 1.5%. Bharti Airtel is up 1.5% as well. Big move coming in there. But it's metals, really, that's looking good. Hindalco, Tata Steel, JSW Steel, all in the green. Bajaj Auto had a couple of positive notes yesterday. There's some follow-on buying this morning as well. It has a couple of auto stocks, the company. There's Tata Motors, Maruti Suzuki that are also in the green. And Adani Group stocks, Adani Enterprises up almost 1.5%. The other bunch of stocks that are looking good this morning is some of the pharma names. So whether it's Divi's, Apollo Hospitals, all trending higher. And now the market is putting on some more weight. So the Nifty is up almost about 4-5 points, but the mid-cap index is up about 90 points. So broader market strength is looking pretty good. What is not doing well from the frontliners? Reliance. It's dragging its feet a bit, down about 0.6%. You have TCS as well, Britannia, M&M, Nestle, that are all a tad bit in the red this morning. So the entire consumption piece of FMCG is not looking that great. Britannia, Nestle, Tata Consumer, all in the red today. SBI, Tech Mahindra are a couple of other stocks that are just absolutely flat right now. But it's really a tug of war between Reliance on the downside and L&T and Axis Bank on the upside. So, largely flat, but good to see that after 3 days of an up move, the market is at least holding on to its gains and standing tall above that 17,700 mark. But suffice to say, a flat opening this morning.
Well, consolidation is something that the bulls will take as well after the up move that we've seen the last few days. A few stocks in the broader markets that are in focus. Religare, that stock is up close to around 4%. Massive volumes out there. That one-time settlement has been taken positively. That's a trigger the street was waiting for. We'll get the management on the channel in the next couple of hours or so. That stock, Religare in Enterprises, that one should come up for you on the screen. So keep an eye out on that one. A couple of large trades is what we saw yesterday. There was Kirloskar Royal Engines. That stock ended high with a gain of 20%. Well, it's piling on the gains even now. It's up close to around 2%. And Shriram Transport as well, Shriram Finance that is. One large seller out there who had close to around 4.5% equity, that's out of the way. So the stock is reacting positively, up close to around 1.8% odd. A couple of other notable, movers today. Data Patterns, QIP has been announced. So that stock, I think, had opened up a little bit lower the last time I checked. And Gokuldas Exports, since it's a PE-owned company, and in fact, they're looking to shed some stake at a bit of a discount. That stock had opened up on the back foot with a cut of close to around 3.5%. Or I think that large trade has in fact taken place. But it's a flat opening. The good news is the mid-cap index continues to outperform, sitting with a gain of around 0.3%. Surabhi.
Oh, yes, absolutely. I think it's all about stock picking. I mean, that's the mood of the market today. Look away from the indices, let things settle, get to stocks. By the way, some of the sugar names are continuing their up move from yesterday. Bajaj Hindustan, for instance, has started about 3.5% on the upside. There's some buying on NCC immediately that you can see, 3.5%. The volumes are picking up. Sequence Scientific is up 8%. Why? Because now they'll not go ahead with an acquisition that was earlier going to cost them a little over 200 crore rupees. The market absolutely loves that. Big volumes on Sequent, 8%. Not sure what the problem with that intended stated acquisition earlier was, but the market's extremely thrilled they're not going ahead with it. And that's a stock that's definitely a big mover on news. Most of the Adani Group stocks are also holding on to their gains. And then you have some other names like Greenply that are bouncing up on the upside of the screen. Overall, the benchmark indices are absolutely flat. Minor red tick on the Nifty and the Sensex. It is really all about the mid-caps. That's how this is playing out. Well, let's take the conversation.
One more stock, more stock, Surabhi. Home First Finance. There's a large trade that takes place out there. I think it's close to around 80 lakh shares that have changed hands. And that's at a sharp discount from where it closed yesterday. So that's down close to around 6%, but that's predominantly because a very, very large trade has taken place. So we'll try to get you for the details on that. But that's another stock that, and Gokuldas
yeah,
Exports.
That was Vivek's story.
Yes.
And finally, we're seeing that. That's a big chunk of equity. One of the current key shareholders of the company. PE, one of the PEs that are in the company. They're perhaps moving out with that near
And
11.5%
that's half of what
deal.
they hold, so we'll have to find out what they want to do with the other.
With the remaining ones. That's Gokuldas also in focus. Lots of stocks and news, and a lot of the stories that we have been alerting you on getting confirmed as the market opens out today. Well, let's move ahead and take this conversation to Manishi Chaudhary, Asian equity strategist at BNP Paribas. Manishi, always great to have you on the show. Thank you for joining in. And I think the question that everyone's grappling with is that whether we have heard enough of the interest rate hike, yield inversion talk, and whether equities in India and around the world can really move on and price all of that in. What are your thoughts? We're still awaiting the jobs report, obviously, on Friday from the US. Where do things stand for you as you see them?
Since late January, there's been a profound shift in the market's expectation about where the Fed would go and how long it would stay there. And I think the jury is still out on this question, as you rightly pointed out. The jobs report on Friday, and subsequently the next week we have the CPI report coming out of the US. These would play a key part in influencing that expectation before the actual event on 22nd and 23rd March. Now, having said this, it now seems clear that we are in for a higher for longer world. In fact, possibly much higher for much longer, as it seems now. Our own expectation from the BNP Paribas economists have gone up to about 5.75% as far as the terminal Fed rate is concerned. And we think that would be reached sometime in the early second half, around July, August. And it would stay there till at least the first quarter of 2024. If one looks at the market's expectation from the US bond market, even about 5 weeks ago, the peak rate that the market was expecting was about 4.9%. If we look at the rate about 1 week ago, that rate expectation was 5.5%. And it's possibly around 5.7 to 5.75 now. So it's been a continuous and consistent increase in the rate expectations, the tighter monetary policy expectations. And I think the market is now, coming to terms with this expectation that, the Fed would actually raise somewhere around 5.75 to 6 and possibly stay there till the end of this year. And this change has been rapid. It's been remarkable, literally over the past 5 weeks or so. And I think there's a reflection of that in the valuations. There's a reflection of that in the flows that come into the emerging market economies. We saw that in February, even though March has been slightly better for some markets. But this...
Sure. Okay, I think there's some issue with the video, Manishi. We'll try and get back to you in a bit. For now, the market is very quiet, really, just consolidating. The Sensex is down about 100 odd points. It's the Adani Group stocks that have made a big comeback. So Adani Green, Adani Total Gas, Transmission, Adani Power, all up in the green, up about 5% today. And this month so far, some of these stocks like Adani Green, Total Gas are all up about 30-40%. Manishi, good morning. So what do you do in a market like this? There is, of course, a recession coming. It could be a mild recession. Perhaps the worst is priced in, as a lot of people believe. But what do you do now? Do you still stay cautious on equities? Do you raise your cash levels? Or do you start to nibble into sectors? If yes, which ones are you looking at now?
For equity investors, and especially in a market like India, there are 3 or 4 factors that we consider. Number one, cash generators and companies that have net cash on their balance sheets. We try to avoid leverage as far as possible. When we have a steadily rising interest rate environment, leveraged companies are kind of vulnerable in that environment. Second, we would also rather play value in preference to growth. Now, that particular angle, that particular consideration set is difficult to find in India. It's much easier to find in North Asia, in Korea and China. But as far as possible, even within sectors, we would try to play value rather than growth, because in a rising cost of equity environment, it's the growth stocks or the long duration stocks which would suffer more. Third, we also look at the earnings estimates and in which direction they're moving. If you look at the last 1 or 2 quarters and the quarterly result announcements, there are basically 3 or 4 sectors in India that have seen earnings estimates moving up. Financials is one of them. The second one is industrials, and the third is IT services. We were till recently quite cautious on the IT service companies, but in our most recent rebalancing of the Asian model portfolio, we have actually added to Indian IT service. This was about 3 weeks ago. And we think that the kind of deals that are coming through for the top-rung frontline companies should protect their revenues even in this uncertain environment. So pretty much our Indian silo in the Asian model portfolio is focused on financials, banks predominantly, but to a small extent insurance as well after the recent decline, IT services, and some consumer discretionaries, particularly on autos. Also some of the oil and gas and other energy companies.
All right. Hi, Manishi. Morning. What about the auto stocks? I think you all lightened some position the last time we chatted. What's the call out there?
True. We did lighten some positions on the auto environment. Some of the companies, they have moved up quite significantly. And I think it was partly driven by strong fundamentals. If one looks at the order backlogs and the waiting period, for some of the, I wouldn't give it a broad brush characterization, but some subsegments like, let's say, tractors, SUVs, etc., there was a very significant waiting period built in, which obviously led to earnings estimates moving up there as well. But we felt that, after a very strong performance right from late November last year, I think the positives were kind of built in. So the most recent rebalancing that we did was moving slightly away from the auto universe and moving more into IT services as far as India is concerned.
Manishi, I think you sort of put on the table a perennial problem with those who are picking stocks in India. Where's the value, right? So
Right.
There's no easy answer to that question. Where is the value? Beyond IT services, what else are you buying in India?
No, that's a very valid question, and we struggle with it every day. In fact, it was this question primarily that led us to downgrade India to a neutral and upgrade China to an overweight in early December. And we're still sticking to that stance. And I think, despite a small recovery in the FII flows in the month of March, this overvaluation question will continue to play in the minds of the foreign investors who have the entire gamut of emerging market to invest in.
Right,
so it's not an easy question to answer because I think, across all the sectors, one has to look for relatively cheaper companies, and not only, I would say, cheap, but also those companies which have a strong earnings estimate tailwind. If we are kind of locked into a company which is seeing earnings estimate downgrades, then something that's appearing cheap today might appear expensive tomorrow, and that's kind of a valuation trap that we have to avoid.
Okay, got it. Manishi, thanks a lot for taking the time out and speaking to CNBC TV18. We have to wrap up this conversation, but thanks for leaving us with some ideas. So they like IT services, you're getting into that space. By the way, the market is a bit choppy. A lot of heavyweights are putting a bit of pressure on the market, whether it's Reliance, ICICI Bank, TCS, ITC, all dragging the markets lower. Nifty is down about 28 odd points. But let's get back to some of the big corporate stories that we're tracking. IGL, Indraprastha Gas, was in focus yesterday. The company and Genesis Gas Solutions have entered into a joint venture agreement to set up an integrated smart meter manufacturing plant. Now, this is a deviation from IGL's regular business. They have a capex plan of 110 crores. The plant will be operational by 2024 and will have an installed capacity of 1 million meters annually. To discuss this and the company's diversification plans, we're joined by Sanjay Kumar, who's the managing director at IGL. Sanjay, thanks a lot for joining in. And tell us a little more about this whole smart meter manufacturing plant venture that you've entered into with the Genesis. It's a deviation from your regular business. So what's the rationale behind it? Are you already getting some orders? And apart from the investment that you'd have to make, do you have everything else in place, like the technology, etc.?
So thank you, Sonia, for having me here. First thing is that this is we do not see it as a deviation from our regular business. Actually, we have been buying about 0.3 to 0.4 million meters per year from the market. So it is only natural for us to try and see if we can establish that business ourselves and compete in the market. The domestic gas market primarily is about 1.5 million meter market per year. So companies are buying about 1.5 million meters in a year. And the government is pushing for more and more houses to be connected with pipeline gas. So, which effectively means that if the growth explodes in this segment, then we may have a demand of 5 to 6 million meters per year in next 7 to 10 years. And that is where the market that we had seen. And we have partnered with Genesis Gas Solution. We have 51% in this company, and 49% is held by Genesis Gas Solution. There will be equal number of directors on the board. The company will start operating in 1 to 1.5 years. Initially, we will be selling meters based on imported kits. But very soon we will be manufacturing the whole meter in our plant, and we hope to have about 1 million production of the meter per year going forward.
Okay, so there's 1 million production. Mr. Kumar, yes, the total investment, we do know that it's about 110 crores, and I guess it's a partnership of 51-49, so we know that. Can you tell us what is the revenue opportunity that you see with this JV, and will it only be restricted to, this JV of course will be restricted to smart metering, but are you also looking to, branch out into other areas, whether it's EV stations, LNG supply?
So, in this particular opportunity, we are looking at meters of different kind, whether prepaid, whether AMR meter or the domestic normal meter. We are looking at EV and all these things coming forward. 1 million meters will be produced in this particular company per shift. So, and the total turnover in a steady state may be about 150 crore or more than that, depends on the pricing in the domestic market of the meter. We are also looking at export opportunities. Now, I come back to the question that you raised about diversification into EV, etc. All those opportunities are being evaluated, and we will be coming up with different announcements in these opportunities, whether it is hydrogen or EV or solar, in few months.
Okay, all right. Hi, Mr. Kumar. You've given us a fair understanding, but I want to understand this gas smart meter market. How big is it, and who are the competitors out there? The likes of listed companies that we have, Genus Power and all, they are not in this space, right? They are in the other smart meters, not in the gas smart meters.
So it's about the current capacity of meters in India is about 0.8 to 1 million meters per year, and the sale of these companies is limited to 0.6. There are 2-3 parts in a meter which is imported, which is even today mostly imported. Some companies have started making all other parts in India. The diaphragm is still imported from Europe. So the total capacity is likely to be utilized, including our meter. There are some announcements also, some other players are also announcing. It will be a competitive space, and we are aware of that.
Okay. Mr. Kumar, I'm just going to zoom out and ask you a strategy question. I've been listening to you. So IGL is looking at smart meters. You mentioned EVs, a lot of these, side business areas, whereas your competitors are getting extremely competitive and aggressive in the main core business, and that is, city gas distribution. I'm referring to Mahanagar Gas's recent moves. They've acquired a company to boost their volumes and have bigger presence in Maharashtra and Karnataka. I'm not asking you to directly comment on that move, but Is that a shift in strategy? You're looking at satellite areas, your competitors are getting more aggressive in the core business. Aren't you looking at investing more in actually gas distribution, increasing volumes, getting into newer areas?
Thank you for the question, Survi. Actually, if you know the business very well, you know what are its pitfalls also. So we need to, it's all value game. What kind of value you attach to an M&A transaction. And we are analyzing these opportunities. We would make appropriate value calls. We will take appropriate value calls on these opportunities. In this one, we were also a bidder and we could not succeed. It finally, Survi, depends on the amount of money that you are bidding, actually.
No, I totally hear you, because that was a conversation we were having, Mr. Kumar. Mahanagar Gas has, I think, paid 6 times, if I'm not mistaken. And the company was a loss-making company, obviously hoping to turn profitable in future. But again, let's move away from that transaction. So you tell us, in terms of the investment that you will make in the core business, you couldn't get this one deal. What are the other deals that you would look out for? What are the other geographical areas where you're hoping to ramp up to boost those volume numbers? Your volumes are, I think, just above 8 SCMD at the end of the third quarter. Let's talk about boosting the core business volume outlook. How much organic, and can you do inorganic moves, let's say in the next 6 to 12 months?
First thing, Survi, is that I have never made any comment about MGL's transaction. I would like to be very clear about that. About IGL, I would like to tell you that presently we are selling about 8.25 million cubic meter per day. By the end of next financial year, which is 2024 March, we would be selling estimated volume of about 9 million cubic meter, 9 to 9.25 million cubic meter per day. And the year after that, about 10 to 10.25 million cubic meter per day. So that is our game plan. About the EBITDA, we hope that we will continue. The Kirit Parikh committee report would be implemented very soon. And we would be able to maintain our EBITDA target of 7 to 7 rupees 50 paisa per SCM going forward in these years also.
So will you at some point be looking to hike prices in the near term? I mean, compared to all of your peers, I think IGL was the only one that didn't hike prices despite an overall hike in pan-India prices. Is that your plan, that perhaps in the near future prices could go up from your end?
So we have a very customer-centric management here, and we would not like our conversion rates to be, affected by higher price. And that's why we have maintained the price, at a very moderate level. In fact, if the Kirit Parikh committee report comes into implementation, we may consider reducing the price a bit so as to maintain the purchase of CNG vehicles by the customers, because that is where our bread and butter lies. So the cash cow remains our CNG business, and we would like to maintain that, and hence the strategy, of pricing. We are taking a very conscious call on the pricing.
All right, got it. Mr. Kumar, very quickly before we let you go, you briefly mentioned about the conversion rate. I think that dipped a little bit in February. Could you give us an updated number? What was it?
No, we are not aware of February, but in January it had gone up by about 10%.
Mr. Kumar,
in January it had gone up by about 10%, from 14,000 to 16,000 in January. I would find out about February because I did not get the opportunity to go through Karib.
Okay, Mr. Kumar, the takeaway, I think, from this conversation is that you're, of course, very keenly focused on the core business as well and looking to grow. How much cash setting aside for acquisitions?
Acquisitions are a very, confidential strategic discussion that we are having. We would only like to assure you that when there is a good opportunity, we have sufficient money in the balance sheet to go for such acquisitions. It has to be value for money, actually. That is the key concern that we have, because we have been doing this business for last 25 years and we understand this business very well, actually.
Okay, so I just want to clarify on one thing. You said that the turnover from smart meters could be 150 crores, and this is in the first year, is it? By FY25?
No, steady state. No. I said in steady state, when we are producing 1 million meters, we will have turnover of 150 crores.
Okay.
The
all right.
return from this project is very good, actually. The estimated return is, more than the hurdle rate that we have.
Okay, which is what?
The companies have different policies. It could be 18, 20%, something like that.
Oh, okay. All right.
It's more than that.
Okay, got that. Thanks a lot for joining in and explaining this to us, the new area that you're entering into, smart metering, as well as the fact that your cash cow remains the CNG business. Thanks a lot for joining in. Let's slip into a quick break. That's a big move on IGL that you've seen in the last many days. Today as well, the stock is up about 1%. On the other side of the break, Abhay Soy of Max Healthcare will be joining in to talk about the occupancies and their business outlook. Later, we'll connect with Vijay Banka of Dwarikesh Sugar Industries and Sanjay